Hi, and welcome to today's Lunch and Learn with Lerner, Cerny, and Fast Financial Group and our partners Horizon Investments. Today's webinar, Lunch and Learn, is tagged The Race to November. Obviously, hot topic as of right now. What's impacting our portfolios, what's impacting the market, what's impacting the economy, and this race to November, along with the coronavirus, are obviously two big factors there. Like I mentioned, we're here with our partners from Horizon Investments. This has been a 10-year partnership, and it's been a great partnership. We share a lot of the same philosophies, a lot of the same goals, and our goals really are to partner with our clients and create, the best possible situation for everybody involved. Horizon has helped us do that, not only on the asset management side, but on the marketing side, and many other things. Just a truly great partnership. So today we're here with Robbie Cannon and Zach Hill from Horizon Investments. First, Zach is a global macro strategist for Horizon Investments. He's been in the financial industry for about 15 years, the last 2 of which as a portfolio manager with Horizon. And he really focuses on and is in charge of asset allocation inside the portfolios with Horizon. So thank you, Zach. And Robbie Cannon, President and CEO with Horizon Investments. He's been the owner of Horizon since 1999. Horizon Investments has accomplished many great things under the leadership of Robbie Cannon. And so, again, like I said, we are blessed to have them as a partner, and we're excited to have them here with us today. So at this time, I'm going to turn it over to Robbie and Zach.
Hey, thank you very much, Nick, and thank you all of you for joining us. I first want to give a special thanks out to Nick, certainly Brad, Todd, Brian, Janae, all the advisors and staff at Lerner. It's been a great 10-year partnership, and we do cherish the Big Rapids presence we both have. So thank you very much. Today, we're going to cover a number of things. Nick talked about this race to the election, or race to December, but it's really about the election right now. But there's 3 topics that you saw at the beginning, which was really China, vaccine, and election. We'll weave them all in. We want to talk about what's going on now. We certainly want to talk about short-term, balance that with kind of longer-term views of policy. But really our job is to set it out and translate what we see in the headlines to how that's going to either change or maybe enhance how you position as an investor. And we do that with a framework. At Lerner, we support this goals-based idea of, hey, it's really important to know between you and your advisor what you're trying to achieve. So whether you're trying to grow wealth, preserve it or protect it, or simply not run out of it, at Lerner they call it build, secure, and enjoy. And no matter where you are in your investor life cycle, an investor journey, certainly the headlines will matter differently. So please get with one of your staff advisors to be able to relate this to you personally. That said, we're going to kick it off talking about where we are now with the election. I think if you look at the polls, certainly if you look at Real Clear Politics, which I would encourage you to do, you do notice one thing front and center, Zach, and I'll bring you in for this conversation, our local expert here, is really the idea of blue wave. And we haven't heard that phrase in quite a while, but we're hearing it this time.
Yeah, thank you, Robbie. So as you said, you mentioned Real Clear Politics, but what we're showing right here actually are the betting market odds. And you can see as of kind of this summer, around the June timeframe, they've really moved in lockstep. And what kind of we interpret that to be is that the market is pricing a complete change, or market is thinking that it's much more likely to get a complete change of the guard in Washington this year than it did in the beginning of the year when the economy was booming. We had just signed a trade deal with China and all of that. So a lot has changed just in the last couple of weeks and obviously throughout this year.
So as we look front and center, I think one of the key pieces of this conversation is you look across, certainly we have the Supreme Court conversation going on right now, but when you look across the election, you're really looking at three component parts: the presidential, the House, and the Senate. The Senate probably, Zach, the tightest race to call, especially in the battleground states. But when we talk about blue wave, there really is a piece there in regards to the Senate that it's possible still go to the Republicans.
Absolutely. I mean, might argue that it's actually more important to be following what's going on at the Senate in some of the battleground states than it is at the top of the ticket. So as a kind of refresher, there's a slight majority for the Republicans in the Senate at the moment. However, there are a lot of vulnerable Republicans in states like we're coming to you from here in North Carolina, but some places out west, Arizona, Colorado, potentially Iowa, and Maine, and maybe as of the last few weeks, even South Carolina. And so that's a really important dynamic that people in the market are paying attention to, but I think it's being subsumed a little bit by what's going on at the top of the ticket. The reason we think it's so important to pay attention to is because that gets down to what can actually be passed in terms of legislation, which I think we'll hit on a little bit later as well.
Well, and it's interesting too. Remember, our job is to translate the headlines down to the investor level, and certainly, Zach, when you look at the last 100 years, it really is kind of difficult to know just when you're, especially when you're looking at charts like this, Real Clear Politics, to go, all right, let's translate that into market activity. I mean, we remember in 2016, Trump won certainly the betting markets, and the polls did not think that. Market actually was down 5%, if you recall, that night to recover and actually end up by 1%. So all of this news really has to be digested.
Absolutely. I mean, we did some work in an earlier piece that we published a few weeks ago, just looking at kind of returns under various presidential control, Republican versus Democrat, and split versus a split government, divided government versus a single party rule. And what we found is basically at a high level, there's a lot more that goes into asset market returns than who has control of the White House or both chambers of Congress. And that 2016 example is a very I think important one to keep in mind. Both the polling, bet markets, and what actually ended up happening in the markets were very, very different. And so from our perspective, we've done a lot of work and thinking about. I think we're going to go into that, what this means from a medium-term policy perspective. But in the short term, the focus really has been around fiscal stimulus.
So let's talk about short and medium term. First and foremost, as we continue our election coverage, on the right-hand side, you'll see the election timeline, specifically called out November 3rd. And then certainly expectations for when the election will be decided. Some changes there in that it is kind of surprising when you look across, I'm sure when you composite the entire populace, you're getting some idea that there might be a delay.
Yeah, that's right, Robbie. And that actually, those fears really came to a head a few weeks ago when the race appeared to be much tighter than it is today. We're voting in the middle of a pandemic. Millions of people are going to be voting through the mailing system that they have not done that in the past. Many states are going to see a massive surge in that type of activity and may not have the infrastructure to be able to handle it on election night. So it's definitely going to be a little bit different than the typical kind of 1 a.m. kind of 11 p.m. something election night calling the race. That being said, it's not necessarily I think accurate to say that some of the fear mongering that we've heard is kind of the base case for the market. If you look at that survey on the left there, it shows that a lot of people, over 50%, are expecting it may take a few days to a week in order to get a result. And so I think the market is also thinking the same way about that.
How does the market balance this idea of maybe a delay, maybe some uncertainty in regards to the policy or the policies that will come out of maybe a blue wave versus the stimulus that is continually coming down? How does it balance that?
Well, frankly, that's too much for the market to balance all at once. So what it's been doing over the past few weeks and kind of the way that the we distinguish between what's going on short term and what the more medium term outlook is that right now, it's the idea and the prospect of a fiscal stimulus package balanced against the risk of the risk of a contested election. So that contested election risk has been going down simultaneously as we have odds shifting in the polls, shifting in favor of Democrats. The prospect for fiscal stimulus is going up, which I think goes a long way to explain, some of the recent market action. But that being said, after November 3rd or November 4th or whenever we kind of see what the actual government looks like, for the next at least 2 years and 4 years in terms of the White House, that's when the rubber is going to meet the road in terms of policy prescriptions.
So, Nick, as we take and digest this kind of election conversation, certainly there are individuals coming in your office probably every day asking the question, is this the right time to invest? And whether you're in an accumulation, or you're trying to grow wealth, or you're in a secure environment, or trying to preserve what you've already built up, or simply you're trying to retire, not run out of money, the answer to that is going to be a little different. But the uncertainty, I think Zach put it well, Nick, that it is short-lived.
Yeah, no question. And you're right on as far as how to address it with people that are in different phases of their lives. But everybody has the question right now, and many people are nervous. I mean, there's plenty of people that are nervous for a change. There's plenty of people that are nervous if it stays the same. And so it just creates an interesting dynamic, for what's ahead. But when we're looking, especially somebody in the build phase, and you're looking at a long-term goal, and you had mentioned earlier the goal-based planning. This is kind of just another time period, in your journey along the way. And it has been choppy for the last little bit, and it'll probably be choppy for the next little bit. But I think the view is that it evens out over time. Now, like you mentioned, people that are closer to retirement or in retirement, the conversation is, becomes around, their feelings, and we want to make sure we balance, being smart with what makes them feel comfortable as well. And one of our tools that we have with you guys, and the Risk Assist, really helps ease a lot of those fears in a time like this, and balance things out along the way. So definitely a hot topic of conversation, and everybody wants to know the impact it's going to have on their portfolios.
Well, Zach, it's easy. In the 90s, market kind of went straight up. You could throw a dart and try to hit a Cisco or an Intel or a Microsoft. Now it almost feels like advisors like Nick and company are more uncertainty counselors. And speaking of more uncertainty, if we didn't get enough with the election, let's go into COVID a little bit, specifically talking about the vaccine now. Zach, there's a number of drugs, but we're seeing this on again, off again trial, whether it's a big company like Eli Lilly or whether it's another company, come into the market with an idea that, hey, we're going to go through this, the phases, and you see them there, obviously, to get approved. But what you're noticing is the big zero at the top of this chart, which is 0 drugs have been approved, Zach.
That's right, Robbie. And there is a lot of focus on vaccine, and I don't know if this is completely accurate, but the amount of resources and time and money that's going into this is got to be, just the most in history to ever try to find a cure to a medical ailment. And so, we're relatively optimistic that something is going to come out of this. What that timeline looks like exactly is really, really difficult to tell. But, I would caveat that a little bit by saying that, you mentioned other drugs and things like that. If you just look at, what happened in March and April in the New York area and places like northern Italy and things like that, despite the fact that we have, as high or higher case counts today, we're not really seeing those types of impacts. And what that means is that we have better ways of treating, COVID infections, which is a great thing for consumer confidence generally, and it allows more people to do things than they felt comfortable doing in March and April.
Well, let's look, we're going to have to deal with this idea of second wave lockdown and economic growth. But first, let's deal with the bottom piece of this chart, which is basically how we're going to react as a populace to having a vaccine. Certainly, if you're in March, April, or May of this year, you're probably like, by October, this thing is going to be gone. It's not gone. And now our attitudes have shifted, Zach.
Yeah, so this is a really fluid situation, but you can see, pretty clearly the trend across the board really is towards less trust in the vaccine. So what that means is just a longer time once the medical technology is there and able to be distributed. It's going to be a longer time before we truly get back to normal.
And let's talk about this too, because there's this conversation about a second wave. We're dealing with the U.S. economy, which is 70% run by consumers. So a second wave lockdown, like we might see in Europe, would actually be pretty damaging, I would think, having already been through this for the last 6-7 months.
Yeah, you're absolutely right. I think there is an interesting case study to look at what's going on in Europe right now. Much higher cases than even they had in March and April. But I'll say that the political appetite, not just in Europe but also here in the U.S. for continued, going back to a second lockdown situation like we did in March and April is just really not there. And frankly, that's for really good reasons. One is it did a lot of damage to the economy and to the small business sector generally. But two, we just have a better idea of, how people get this virus. We have better testing available, all those sorts of things, which just allow people to live, to do more activity in this type of environment.
So one of the things that I'm interested in is, as you look at markets, and again, we're translating this information into markets, into how markets are reacting, is one of the ways markets have been reacting maybe recently is this idea, if it is a blue wave, if it's a Trump administration, they're both going to deal with COVID, meaning probably more stimulus, probably more help for small business. Now, there's going to be other things, especially on the blue side, maybe not as much on the red side, but they're both going to put more money into the system to help this issue.
Absolutely right. I mean, the recent stimulus negotiations are somewhat hostage to the political calendar, and that neither side wants to be seen as caving to the other side and potentially giving them a edge in the November elections. But after this is all said and done, the economy is still going to be needing some help, and so we think, kind of regardless of what the results look like, there is going to be additional fiscal stimulus, and certainly the market expects that, and I think it's reflected that in kind of its overall confidence in its level of equity prices.
So we're balancing now. We talked about obviously the election currently as it exists. We're balancing some risks now in regards to the uncertainty with the election itself, as well as COVID and maybe some of how Congress deals with the stimulus that's in front of them right now, meaning delayed till after the election. But here we go, side by side, to talk about what matters to the market most. And I think this is a really good headline for us, Zach, when we talk about taxes, regulatory climate, and U.S.-China relationship. And just for those of you that don't know, the reason why a U.S.-China relationship would be important here is that China is the second largest economy, U.S. obviously being the first. And then we get into taxes and regulatory climate just to go, you know what policy changes should we equate to each one of them to try to determine how the market might look at each of the administrations. So Zach, take us through this.
Absolutely. So this I would kind of characterize more as a medium to long-term impact of whatever occurs in a few weeks' time from here. But so these are just the most important ways of the kind of thinking about how it's going to impact markets. In terms of the Republican and President Trump's agenda, on the tax front, there's major Tax Cuts and Jobs Act in 2017 that lowered corporate taxes, and that lowered personal taxes. There's a potential to lower those personal taxes even more, but certainly maintaining that corporate tax rate at its current low levels has been really good for profitability of American companies. On the regulatory side, it's kind of no secret that the Trump administration has broadly speaking, cut regulation and red tape, and not just in some of the headline areas like energy, but also in finance, and not really aggressively pursuing things in terms of healthcare and big technology. Generally speaking, that's pretty good for corporate profitability. But on the U.S.-China relationship, that's where things are a little bit more muddy. If we were holding this call last year, we would have been talking about the trade war that dominated headlines through basically the entire 2019 timeframe. And the kind of the negative feelings towards China are pretty broad-based and shared by both parties. But we think that it's a noticeably different line of attack between a Trump administration and a Biden administration in terms of the way that they press China, either in a kind of a systematic multilateral way or in a sort of aggressive, almost Twitter diplomacy kind of way.
So I think either way, can we use one word to describe both administrations? It's the word trillion. I think we should all get used to saying the word trillion because we're going to see a lot of it. It's interesting from an investment standpoint today. We're talking about the difference in administrations, but one of the things we're not talking about, Zach, is this idea of the wall of stimulus. And so therein lies this connection point with the word trillion. There's trillions of dollars sitting in this wall of stimulus that's hitting the market. I kind of feel like I'm body surfing. There's this large wave that's going to bring me into shore. Going into shore would be the investor. The large wave would be all the stimulus. Can you talk a little bit about that?
Sure, absolutely. I mean, we've seen the kind of the headline numbers, but it really doesn't speak to some of the stuff that's going on under the hood. I mean, one of them is in the mortgage space, where there's just starting now really a really large wave of refinancing. And mortgage rates are at historic lows. Pretty much everyone that has a mortgage is eligible to refinance in terms of making a cost-benefit analysis a positive thing to do. That's just more money in the consumer's pocket. And as you said earlier, 70% of the economy is consumer spending. That's just a kind of a broad tailwind to growth. The other one, and we've seen, these the checks that have gone out, the stimulus checks that went out. We saw enhanced unemployment benefits and PPP programs. A lot of that money, because of how uncertain this situation is, was just saved. It wasn't spent. It was put in bank accounts and things like that. And, it just stands to reason that people start to feel a little bit more comfortable about the underlying economic environment, about the COVID situation. That's money that's going to come out of your bank accounts, and you're going to go spend it, on a vacation or restaurants or a big ticket item that you maybe haven't felt comfortable purchasing just yet.
So we talked about stimulus. I certainly want to address this, and maybe you give us a yes or no. We got a lot of stimulus, Zach. Are you worried about inflation?
No, I'm not worried about inflation. The things that drive inflation in the kind of the medium term are demographics, and they are globalization and technology. Those three things really have not been changed by this COVID epidemic. The same way we worried about inflation after 2008, 2009, it never really showed up. I think we might be in the same situation here today.
So, Nick, I think what's interesting about the conversation, not only in regards to stimulus, but certainly in regards to interest rates, is that not only do we have accumulation and preservation type clients, but we have retirees. And I know you have retirees coming in again every day going, the risk is running out of money, and yields now are at an all-time low. And really, when you're looking at 10 years across the world, extremely low, even negative in some places. And there's never been a time where advisors have had to plan with these kind of interest rates, and it becomes challenging.
Yeah, no, you're absolutely right. And everybody has those questions. And where do you drive income from? And I think one of the beauties of of our enjoy phase that includes our smart income portfolios is kind of the style of investing and putting a bucket of the money in short-term investments, cash-like positions, and then really maintaining, your investment strategy amongst the rest of the portfolio. And I think that that's helped, calm some fears. I think that, having that strategy has really, been, really helped ease the worries, of a lot of our investors that are in that phase of their journey. And so, but it does create, I mean, on the, on our portfolio side, those are the things that we have to think about and talk about all the time is where do we continue to get, some return even in that cash bucket, so that we can have, make that last as long as we can for our clients.
Well, as you look across, again, just to summarize, the investment journey in regards to build, secure, and enjoy, we want to summarize by saying, we talked about the election and where things currently stand. Certainly, this is a very fluid environment. We've got some risks that we want to look at in regards to the election, whether there's some delay with it, and in regards to vaccines and just COVID response in general. We talked about some risk in regards to the investor, whether that's the uncertainty that those two bring, or low interest rates if you're a retiree, and how to plan for that. But then we talked about the policy differences between the Biden and Trump administration, and what we said was this isn't an end to the conversation. This is a continue. We need to continue this conversation because we're going to have to digest the policies that either administration will make. That said, there's a wall of stimulus that really is a positive benefit, a tailwind to investors today. Not to say it won't be volatile and it won't be a normal environment. I mean, when you think about those that have been in business school or even graduate school, there hasn't been a business cycle in the last 10 years, which let's end there and just say it's never been more complicated, but that's where the advisor comes in to be able to translate all of this complexity to you so that you don't make a knee-jerk reaction, no matter where you are, whether you're build, secure, and enjoy. So I know the leaves are changing. It's October. You might be getting ready for hunting or maybe snowmobiling. I love to do one of those with you. And I know you're preparing for winter, but preparation should also be something you do with your advisors, specifically in times like this. So for all of us at Horizon, certainly from Zach and I, thank you for allowing us to be with you today. And thank you, Nick.
Thank you.
Yeah, absolutely. Thank you, guys. Again, we appreciate our partnership, and we appreciate our partnership with our clients and working with them, whether they're in the build, the secure, or the enjoy phase. It's great opportunity to plan through times like this. And so, thank you guys for taking the time today. Thank you for your continued partnership with us, and we definitely appreciate it. And if you guys have any questions in regards to where you are in your portfolio, don't hesitate to call us and dig deeper into this conversation. We'd love to talk about it. So until we talk again, thanks for tuning in.